Hi there, I'm Dean Heskin, President and CEO of Swiss America. You are tuning in to our most recent episode of our podcast, The Secret War on Cash, where we take a good look into some of the different things that are taking place in our financial markets and our economy. I should actually just record that because I say that at the beginning of each of these podcasts, but that's exactly what we do. And I have with me my co-host, Chris Agelastos. Chris, good morning to you.
Good morning. Thanks for having me.
I'm thinking about changing our intro because I say the same thing. We're taking a look at changing things in the market and the economy. So if you have some new intro that you can introduce there, we'd be more than happy to take a look at it.
I'll see what I can come up with.
Yeah, I didn't ask you how you're doing today because I already know the answer to that. So let's get right into it. We're going to talk today about actually something that is kind of a pretty big change over the last couple of years. I mean, it's been around for a while, but it's really kind of taking off now, and that is AI, artificial intelligence. It is quickly gobbling up literally every last corner or area of our economy in terms of various work sectors, industries, et cetera. And so much so that, they're now saying that this is, they're equating it, let's say, and we'll get right into this article entitled "The Elite Investor Jeffrey Gundlach Compares the AI Boom in Stocks to the dot-com Bubble and Warns of Economic Pain." Now, I remember very, very well the dot-com bubble. I remember as we were working with several of our clients, talking to them about the same thing we talk about today, where when it comes to investing and when it comes to your finances, if you can find something that is an explosive gainer or something that offers explosive growth, that's fantastic. But you always want to keep that balance. You want to keep that diversification because no market goes up forever and no market goes down forever. Never been that way. And that's where, and we saw this firsthand, especially at the firm, where we had many people who got somewhat, what's the word, kind of bored or tired perhaps of the diversification of the things in their portfolio that weren't moving, let's say gold at that time, back in the early 2000s, that we're not moving as much as a lot of these dot-coms, late 90s and early 2000s type stocks. And bottom line is to the whole thing is that they started taking their conservative diversified positions out and putting it into doubling down in their dot-coms only to find it to go boom. Right. So boom in the wrong way, not boom up. Boom down.
Right.
So I say all that to, I guess, Chris, get into the fact that could this scenario that we see taking place in the artificial intelligence realm be that same type of scenario that we did see during the dot-com bubble?
Yeah, I mean, you certainly have a lot of experts saying that's the case here, and big name guys too. I mean, even Warren Buffett, is talking about this. So you got to pay attention in those situations. But you never in the market. I don't know that you ever really want to be compared to the dot-com bubble because it was great when it was running up. But not so much when it came down. And people that were involved in it will remember, I mean, it went up about 80%. And then within 12 months down 85. So sure. I suppose if you got in and out at the right time, you were okay. But you're right. That's not what people were doing. They're always chasing the exciting ride. And I suppose if you're young, and you have time on your side, you can be more aggressive. I don't want to say reckless, but maybe, right? You can get away with more mistakes and pitfalls. But a lot of our clients obviously are nearing retirement or in their final work years, and they really need to protect what they have. So you're right. Some of those boring safe havens. Maybe it's bonds, or CDs or precious metals, or real estate in certain markets. Those things help keep you balanced in the turbulent times, and And yes, they're not as exciting when you have some of this AI stuff or some of the early .com companies exploding back when they did. But again, they protect you when all that comes crashing down. So yeah, life is all about balance.
100%. And that's, it's the interesting thing is when, the market gets into these periods of irrational exuberance. I remember the stories back, when you have like your taxi cab driver or the guy shining your shoes that are giving you stock tips or investment tips. And it's interesting because I received a call from my brother-in-law who wanted to talk about business and investment stuff. And we just spoke a couple of days ago, and the entire conversation was centered around AI and artificial intelligence, and where to invest money and how well those things have done. And it did remind me of that. Like when you find a sector that is just really exploding, literally it's what's driving the market right now. But B, it's captured the minds of everyone out there. It reminded me back to where they talked about that's a sign that, hey, there's probably something happening here with this market. And, on the heels of that, in this next article, the bond king, Bill Gross, he's referred to exactly that, has been for years, the bond king, is also weighing in on this discussion, talking about the excessive exuberance. And I think the term was a Greenspan originally who said irrational exuberance. But we're talking about it right now as it relates to what's happening in stocks, and it's had an effect or an impact on what his strategy has been with bonds. And what they're getting into here is the fact that, again, what AI is doing, yes, it's taking the world over in a lot of ways, but what Gross in particular here in this next article kind of gets into as well is there are some underlying other issues in our economy that are going to damage, if you will, the marketplace as a whole, meaning that the fundamentals are just not there. So it's not even just that we're saying, hey, AI is the bubble, it's creating this huge bubble, and that's what's going to cause the market to crash. AI is one element, but there's also a lot of other things, that underlying issues in the marketplace that could cause some problems. I mean, what do you see happening there, Chris? I mean, do you think what Gross is saying warrants the same type of consideration?
Yeah, I mean, what he's really saying is, if you look at the fundamentals, the market should not be up as much as it is. Over the last year or so, as interest rates have climbed, the S&P has shot up, around 20%. He plainly says it's partially because of deficit spending and just market enthusiasm. The markets really do trade a lot on emotion. And when people are excited and seeing positive numbers and hearing about new technologies, when we're excited, a lot of times we tend to overlook some of the facts and formulas, right? We're into it. Things are going well. We think the train is going to keep going, and that's really the danger right there, is because just as excited and happy and thrilled as people may be with the market gains that they've seen as of late, as soon as they see some negative things, they get very emotional, worried about losing their money, and pull it out, and you can see major dips. So I think he even said in here, just buckle up for a ride, because that's the stage we're in the market. And the problem is, nobody can tell you exactly when that downfall is going to happen. It could quite literally be today, or maybe 6 months from now. And about the time it's happening is too late for you to get out of it.
Sure. Well, and that's just it. And I do remember that as well from the .com bubble. People, there was such a what's the word I'm looking? Just such an unbridled optimism that people had, that they did not want to believe that this, was going to end. This was going to stop. I mean, good Lord, in the .com boom, you had people who, and I don't know if you remember this, Chris, but were literally leaving their jobs, their careers,
Yeah.
because they had become so masterful at managing their stock portfolio that
Right.
was going up, exponentially each year. And they're like, why do I need to work anymore? And when that stopped,
That's it.
that you want to talk about a giant rug being pulled out, that's a pretty big rug. So,
Oh, yeah.
well, like all these things that we've been talking about, there's certainly going to be more to it in the weeks and months ahead. We will definitely continue to watch the artificial intelligence move. I mean, it's here to stay for sure.
Yeah.
But it's just a matter of to what end. And mind you, with investing, especially when you're investing into a stock or a corporation, you're not investing into you're investing into the profitability of a corporation. That's at least the what it should be. You're investing into
Right.
how well they do, how well they're managed, et cetera.
Mhm.
What you see happening in that AI sector is not per se a reflection of all the fundamentals of it. It's just the hype of it. And that's where you just have to be very cautious. So we'll keep
Correct.
looking at that. For those of you tuning in, thank you for doing so. If you have not subscribed to this podcast, please do so, as we will be bringing you this type of information in other areas as well in the weeks and months ahead. Thank you so much for tuning in. Have a great rest of your day, and we'll see you soon.